Welcome to our first live stream of 2023, and it promises to be an exciting one. It's finally good to jump onto one of these live streams with some good news. We're seeing the market pump. We're up 1.7% today. We're sitting at 18,200. Things feel a lot better now with expectations of inflation heading to the downside. Now we're going to go through exactly what to expect, because I know a lot of people are getting super excited. I do want to share some of the downside risks as well, how to play this, what's the market expecting, because right now, like I covered off in my video yesterday, there's no room for error. The market is expecting really good numbers, and so oftentimes when that's priced in, a lot of people don't seem to understand that. They go, oh, good number, huge rally. But if it's priced in, traders have already taken that up and then they just dump. Okay, so I want you guys to understand that. That's really, really important. Now, the other thing we need to be aware of is the Fed rate monitor tool. So we're going to cover that off as well. Now, the reading will come out in 9 minutes. So I've got 9 minutes to give you guys the expectations, what's going on quickly in the charts, and then on the dot at 8:30 Eastern time on the half hour, we'll cover off exactly what that CPI reading is. Cool. So this is the pattern we've been forming here. Guys, don't forget to smash up likes always and subscribe. Check out the links in the description. Support the channel, guys. A lot of you can check out BYBIT. If you're trading anyway, use BYBIT. And it will support the channel, and you'll get 0% spot trading fees, which is awesome. Cool. So on the 4 hourly chart, we were forming this double bottom pattern. It's the same on the daily chart as well. And what you've seen here is a nice big move. We predicted this days ago, guys. We tweeted this, we covered this off in the video, and a nice big move. Now it's broken through the neckline ahead of CPI. But look at the region where it stores. Exactly the region we got these wicks here. So don't be surprised, right? This is very normal. And now we're waiting for CPI. So you can see on my drawing, I've said don't be surprised to come see a retest before a bigger move to the upside. But we need good CPI reading. I'm going to come on to what good CPI reading means. Now, this pattern can take you all the way up to 20,000. Again, if these patterns don't make sense, ijaz.uk/TA. My TA course is free. We cover all of this stuff and how I got to that price target, etc. 20,000. Now, don't be surprised. We can also be forming what is called a double top pattern. Okay, so I need to make you guys aware. Boom, rejected, come back down. Boom, get rejected again, come back down. That's an M pattern, or also double top pattern, which could send you further to the downside as well. So this CPI reading is really critical, and it can send us in either direction. Now, you can already see that the market is pricing in a positive situation. So I want everybody here to be very, very careful. Very quickly, what are the expectations? Okay, 7.1% was the headline inflation figure last month in November. For December, the market is expecting this to come in at 6.5. That's a big fall, another 0.6 fall down to 6.5. So we'll be looking out for 6.5 on the headline. For core inflation, that came in at 6 in November. This is expected to come in at 5.7. So expecting this to fall to 5.7 on the core figure. And finally, what about our month over month figure, which is a very important figure this time round, because the market initially expected this to come in at 0. In other words, no inflation in December, which would have been insane. Then we saw projections starting to see and expect that we could see minus 0.1, i.e. a deflationary month at the run rate of 1.2% per annum. Right? So we got to look out for this figure. This is going to be an important figure, and we'll be looking out for it as well. Remember, when the report comes out, it'll look something like this. You get your month over month figure. We'll see this here. We want to see, is that 0 or minus 1? If it's anything worse, we've got a bit of a problem. Okay. Now we want to see this come down, which is our headline, which is showing 7.1. This needs to be 6.5 or less. This 7.1 you're seeing here, just above my head there. Okay. Then we're going to come down and we're going to look at the core figure. This is showing 6 here. This needs to be 5.7. Got it? If we beat on all three of those numbers, that's a triple beat, and the market can be positive. Remember, it's already priced in, guys. This is what's crazy. Look at what we're seeing here. I've shared this with you guys in the lead up to pretty much 20% or so of the market. Look, it's notched down a little bit, which is interesting. So some people are starting to hedge. 15% of the market now is only pricing in a pause. 85% of the market is pricing in 25 base points. No one's pricing in the bad scenario if CPI comes in high and Jerome Powell needs to do 50 basis points. That's very, very important. Okay, guys, we are 6 minutes away from the CPI reading. I'm going to go through all the different scenarios with you, so bear that in mind. Let's see who's in the chat here. Aswad, good to see you. Nabil, good to see you, buddy. J-Dog, Pele, a lot of familiar faces. Good to see you guys. Gareth, Ian, we've got you in the chat as well. Suresh, Rhoda, awesome. Bunch of you guys I recognize from the previous live streams. If you're new here, welcome. Make sure you're subscribed. We cover off all the pertinent bits to do with crypto and the things that are moving the crypto markets. Okay, now I need to share with you this as well. If I come into the Bitcoin chart and jump down to the 5 minutes, look at what we're forming. we're forming a similar pattern than I was showing you on the bigger time frame, right? We're running up to this neckline, we got rejected, and we're running up to it again, and we got rejected again leading up to CPI. So this is now waiting for direction to see, can we push past this line at about that 18,200 level where we got stuck, and can we then push on towards the next resistance line will be 18,700. Remember, 18,700 is our channel, okay? That's a very important level. I do want to show you why that level is important, in fact. Let's just pull that up. And I know this is a messy chart, but this is where we've got all our levels. Remember here, this channel we were in, the 2 green lines? That's important, okay? When we lost that, due to the Sam Bankman-Fried and FTX, we've not managed to reclaim it. So it'd be really good to get past 18,700 and get back into this channel. That would be a major coup for us. Digital D, good to see you. Martin, good to see you. Hope you are well. Absolutely, Kira, good to see you, buddy. Cool. Okay, now 4 minutes to go. I'm going to give you the different scenarios. And this is to do with JP Morgan as well and some of their expectations. Let me just close this little dialogue here. Cool. So 3 different scenarios. Either we're going to beat, and that would be 6.4 or less, right? 6.4 or less, market's going to be super excited. There's a 20% probability of this playing out, and the S&P we could see up 3 to 5%. Okay, remember, Bitcoin's going to move more than that. The S&P is having a 3 to 5% day. Bitcoin could be having a really nice day if we see 6.4 or less. Okay, anything between 6.4 and 6.6, which is your neutral range, right? What the market's expecting, because they're expecting 6.5, that is a 65% probability. This is the most likely probability that all the banks are expecting and all the economists are expecting. And the S&P will have a moderate day of 1.5% to 2%. Nothing to write home about. And this is what I want people to understand. The market has priced in 6.5. To see crazy pumps, everybody wants crazy pumps. We do need better than expected. We need a surprise figure, 6.4, 6.3, 6.2 if it's even possible, right? So if it's just 6.5, or the market won't be having a crazy day. It'll be having a good day. It won't be having a crazy day. More scarily, however, is if we get a miss. Okay, if CPI comes in 6.6 or higher, 6.7, there's a 15% probability of that happening, and the S&P is expected to be down about 2.5 to 3% on the scenario of a miss. Do not be surprised to see if we get this miss scenario, Bitcoin falling as well, because Bitcoin has, it's been on an absolute tear. If we look at where we're at with Bitcoin here, you can see that Bitcoin is up just, let's go to the wick, 12%, right? 12% in just about 14 or so days in the last 2 weeks here, which is insane. Insane move here. Great start to the new year on Bitcoin. And it reflects that a lot of people are starting to now think, okay, we're not going to head into a deep recession. Maybe we'll touch into a mild recession, but if CPI comes down, Jerome Powell's hand will be forced to lower interest rates. Remember, he went from 75 basis points down to 50 basis points. If we get another low CPI reading, then markets are expecting 25 at the next meeting, which is on February the 1st. We'll be covering that here as well. Okay, so those are our expectations. Comment now. We've got 2 minutes to go, guys. Comment in the live stream section there. What is your figure? I want to hear it from you guys. Just drop a figure for the headline inflation. Remember, market's expecting 6.5. What are you expecting? Drop it below. I can see a couple of you have done that already. Omar is saying 6.3. Man, the markets will rally. Pixel Snake is saying 6.7. Markets won't be too happy with that. Then you commented 6 after that. Markets will be buoyant with 6. Real Deal says CPI 8%. Not much of a chance of that happening. That would devastate markets. Special K says he thinks 6.7 to 6.8. Remember, that's on the heavy side. Markets won't be too impressed with that. And again, remember, there's no room for failure. Sometimes what happens is the market doesn't price in a good performance. They don't trust the expectations. But here, the market thinks 6.5 and it's pricing it in. And that can cause some problems. Let's see what you say. Rhoda says 6.4. Music World says 6.7. 5.9, you're insane. Kieran 6.9. HK says 6.4. Omar 6.8. Okay, so mixed bag. Bunch of you thinks we're going to miss on the upside and the inflation's going to still be a little bit hot. And bunch of you are thinking it's lower. Now, in the last minute, whilst we wait, do comment. What do you want? Do you want inflation to beat? Do you want a good outcome? Or do you want a negative outcome? Comment below. What are you expecting? Just say miss or beat. What do you want? Because I know some people want inflation to miss because they want more time to accumulate. Now, either way, even if we get a beat on inflation, I still think there's going to be time to accumulate. I don't think this train is just going to suddenly go to the moon. Remember, Jerome Powell doesn't want markets to run. Okay, let's refresh. Let's see if we can get this reading up. I'm going to refresh on my iPad as well because sometimes this messes up. Let's refresh. Here we go. December falls 0.1%. Okay, let's open it up. In December, consumer price index for all urban consumers decreased seasonally adjusted and rose 6.5%. Good. Over the last 12 months, the index for all, 5.7. Perfect. It's a perfect beat. So let's open that up now. Good. We got a double beat there, guys. We got our 6.5 and we've got our 5.7. Just want to make sure. Yep, perfect. 6.5, 5.7. Let's see how markets are responding. Let's jump on over here. Let's see how we're seeing big wicks. Look at this, guys. Look at the traders. They are insane. Let's put this onto the minute chart for a bit more drama. And let's take a look at that. Now, you have got your month-on-month 0.1 as well, guys. This is a triple beat. And remember, all the three things we just discussed, we've got. Smash up the lights, guys. We could not have gotten a better CPI reading. I just want to run through this with you guys, just to make sure everybody is aware. Let's see if I can get the PDF up. Perfect. December. Okay, see this? Minus 0.1, a deflationary month, guys. This is absolutely huge. We are now deflation, and sooner than we thought. A lot of people thought this may take some time to come. Markets were absolutely right. Spot on with their predictions of 6.5 and 5.7, mainly led by a bunch of commodity prices coming down as well. We can go into the minutiae later, but I do want to see what does this mean for the markets. You can see Bitcoin just falling a little bit, as to be expected, right? Traders play a bunch of games leading up to these types of events. If you're an experienced trader, then by all means, you'll know what's going on. If you're not, it's best to stay away from these little moments, right? In terms of your long-term thesis, you decide what do you want to do in terms of dollar cost average or long-term holds. But for now, this is good news and markets should be positive about this. Let's take a look here and see what we can get in terms of the SPY. Let's see if we can get some pre-market action, and you can see the SPY is going absolutely insane as well. Big fall to the downside here on the SPY, and that's just traders playing games here on the minute chart. Remember, a lot of this was priced in, so we had to see something more exciting in order to get that move to the upside. Okay, so that's why markets are not super excited. It came in at expectations. What did I say? So now people will be sitting there going, oh, what's going on? CPI came in exactly expectations. Why is the market falling? This is because traders price in what they're expecting. If you had 6.4, if you have 6.3, you'll see a crazy day. Now, I do think this will settle once the traders settle over the next kind of hour or so, and then we can see where do we finish out on the day. Let me know in the comments, what do you guys think? I could see a bunch of you wanted to miss. Let's see what you guys say. Simon says, I'm short, so I wanted to miss. Brandon wanted 0.5. Yed says, I wanted to miss. HK wanted to miss as well. A bunch of you are going to be upset because we got to meet. We got to meet. We haven't got a crazy beat. We got to meet on expectations, and we can see how the traders are now playing out. Let's jump back into the Bitcoin chart. But look, long term, guys, this is good. Let's remind ourselves, what do we want? We want to get out of this mess, right? And that's going to require inflation to come down. And I spoke about this a little bit in the lead up in the last couple of videos we've made. This year, the market switched its focus. They feel like inflation is a done deal. And the figures are now showing it, which is good. But that was the risk, right? Because if the markets are saying, oh, inflation is a done deal, it's coming down, and then inflation still shows that it's high or notched back up again, that could have been a little bit of a panic, okay? But it's good that we haven't got that. Remember, the markets are focused on the labor figures now. They're giving much more precedence to the labor figures this year than they are the CPI. But it doesn't mean that CPI can just do whatever it wants. If it surprises to the upside, market's just going to be upset again. Okay, so a triple beat, really good news. Let's just go back through this report just to make sure you guys are fully aware of what's going on. We do have month-over-month inflation coming down, minus 0.1%, exactly as we expected there. The headline inflation coming down to that 6.5 level. So nice gradient. Remember here where we fell? You got a little bit worried here because it started to like taper off. And that's not great. When the differential there, the gradient is tapering off, that was fearing markets that we could have sticky inflation at that 8% level, which would have been a nightmare. Now it's plummeting down. It's gone all the way through the 8s, all the way through the 7s. Now we're sitting at 6.5. That's going to help the markets a lot. And the fact that the core inflation is moving in the same direction with it, that is good news, right? And we are starting to see meaningful falls here. Gasoline down 1.5%. We have seen fuel oil go up here quite significantly, but it was down in December. So if you look at the December figure, over the year it's been up 40%, but 16% down in fuel oil, which is good, 10% almost down in gasoline. This is what's helping bring this down. If we also go down, let's see if there's anything interesting here in terms of where those figures are coming down. It's always good to have a quick glance through here to see what are the big movers here on inflation. If you guys have any questions, drop them in the chat. I'll try to cover some of those off. Utility, gas pipes, 3. Yeah, it's mainly energy, guys. Mainly energy is bringing stuff down. Used cars and trucks coming down, which is good because that was, remember, when inflation was high, you can see here, you can see that was a big part of the problem. So it's good to see that starting to trend down. Airline fares coming down 3%. That's good. You guys can start booking some holidays again. What else have we got coming down? Fresh sweet rolls, coffee cakes. You guys can put that back in the basket. Good stuff. 1.5% down on your other beef and veal, so go for it, guys. Enjoy. 1.8% down on bacon. You guys crack on. You guys know I'm not allowed to eat bacon, so no bacon for me, nor can I have pork. So you guys crack on with your pork and bacon, which is dropping down 1.8% and 1.7% respectively. And this is what's leading to our deflation, and that's good news. Good news here. Happy with that report. Let's now see, how does Bitcoin respond? I'm good. Look, when you're sitting here on the minute chart, it gives you a confused perspective, right? This is, let the traders play their games. They know what they're doing, right? They run the price up in the lead up. They're trying to sell their positions, which is why you get a dump. And then what happens is the long-term holders will take over as the day progresses, as the market continues throughout the day. So don't get too panicked here. Sit back, let it do its thing. Set your positions in terms of what do you want to do for the long term, and don't focus too much on the minute chart unless you're actively trading and you're an experienced trader. Cool. Let's jump into the chat, see what you guys have got going on our Reckless Danny. What were the readings? A triple B. We got 6.5, 5.7, bang on the money on expectations. And that's why we are seeing a triple B. Now, it didn't shock markets. We didn't get a surprise, which is why the markets are not going to go absolutely berserk. Remember, it's all priced in, and that's what I was trying to say at the beginning. Ian says, yeah, I have a 2.7% fixed mortgage. Inflation doesn't bother me a bit. Good stuff. Yeah, and I was reading an interesting report. I've been reading all these economic outlooks from Morgan Stanley, from JP Morgan, from Coinbase. I've been reading hundreds and hundreds of pages, and I'm going to be disseminating that data through to our course members. So if you guys want to join ijaz.uk/member, and one of the interesting things were in there, we do 3 times weekly live streams, by the way, where we do deep, fundamental macro analysis, like deep stuff. If you don't want to learn this stuff properly, you don't want to be in there. It's like the deep stuff. And one of the things in there says that a big proportion of US markets already fixed their mortgages. So mortgages aren't going to be an issue. This is much higher than 2008. And that's why markets are getting a little bit more comfortable now. Before we were worried, could this be a financial crisis like 2008? And some people still think so, but other portions of markets are saying, no, the situation is not the same as 2008. Banks are far better capitalized. The loans are not as crazy as they were. A lot of people have fixed rates going into this rate hike scenario versus previous rate hike scenarios. So the macroeconomics are very different. Real deal, we aren't recovering anytime soon. I'd still save cash and not go all in. And yeah, you bring an important point, real deal. Like I said, just going into the CPI, regardless, I think we're going to get time to accumulate. A lot of you were worried that, okay, are we going to get time to accumulate if the CPI reads we're going to run? And look, to a perspective, you're already running, right? When you go from 16,000 up to 18,000, the market is moving, and it becomes harder and harder to accumulate. And similarly, when you get to 20K, you're like, oh, why didn't I buy at 16K? And when it gets to 22K, why didn't I buy at 18K? It's just, that's the psychology, right? But one thing is for sure, Jerome Powell's not going to let this market get out of hand. He can't afford to. He needs to keep this market in hand, otherwise that inflation is just going to notch back up again. Okay, so he needs to keep them in their place, and he's warned before of premature loosening of financial conditions. Okay, so that's going to be key. Ian says he expects 6 months of sideways action. Special case says zoom out before FOMO. Absolutely, I like that saying. We should put that on a t-shirt. Kieran says, so what do we think he will be doing come Feb? I still think he will be conservative with a 0.5. See, I was thinking he'd still be conservative, but this piece of data here is quite a big piece of data. You can see this is starting to notch back up again, and trust me, this is going to move over the next hour as well. So by the time I do my next video, probably later on today, we'll check what this is, but this will be higher. 82% of the market expecting 25, and the markets generally tend to get these things right. So will Jerome Powell, remember, if Jerome Powell comes out with 50 basis points in 2 weeks' time, market's going to be upset because they've priced in 25 basis points. Okay, so we will see red. The Queen says, are we laser eyes? Absolutely not now. Well, it depends what laser eyes mean. If it means we're going to be moon boys, absolutely not. If it means we're going to love Bitcoin, absolutely yes. Let's see what else you guys have. Kieran says sideways until Q3 or Q4. Kaz says, is it out yet? Absolutely, Kaz, it's out. Rewind back about 10 minutes into the video. The CPI reading came out, triple beat, and things are looking good. Ian says, how does a China reopening impact us? In a positive manner, right? It'll be, when China starts to open back up again, it's going to give wider markets more confidence. Supply chain bottlenecks will slow down, and that'll be better for the global economy. So that's important. Yed Lam says initial jobless claims are less than consensus, which is bearish, right? No, initial jobless claims are sorry, you talking about which figure are you talking about? It depends. If you're talking about non-farm payrolls, they came in higher than expected, but markets didn't mind because they focused on the wage growth, which they want. But yeah, if it's initial jobless claims, which I've not seen come through yet, if it's initial jobless claims, you want them to come in higher, right? He wants to create weakness in the markets. He wants to create more unemployment to reduce inflation. Jay saying, thanks Ijaz, smashing the likes. Do you think we will go down lower at some point Q1 to Q3? Should we keep powder dry? I think Q1, Q2 can be quite volatile. So when I came into this year, I was thinking Q1, Q2 is going to be volatile, and I expect a few more green shoots coming into Q3, Q4. From the research I've been doing, I don't expect, and I think broad investors and some of the smartest ultra high net worth individuals and biggest banks like BlackRock and Morgan Stanley and JP Morgan, they're not expecting a horrible year. They're seeing value to be had in risk on assets, right? They're seeing value to be had, but they're still being very tentative. So it's not a crazy bull market year. They're not expecting that, but they're expecting a better year than last year. And for me personally, I think that's going to be divided into complicated Q1 and Q2, followed by a little bit easier Q3, Q4. But if the data keeps coming out good, who's to say, we can't get better sooner? If Jerome Powell decides to 25 basis points, and before we know it, at the March meeting, the next one, I'm just hypothecating here, guys, but at the March meeting, we then get a pause. I mean, that's insane, right? What if he just pauses there at 4.5? That's going to be insane, because remember, a lot of the markets are priced in. We're going to get to 5.25 as a terminal Fed funds rate. So that's all important. Brandon says, seems the market are neutral about the CPI reading. We will see downside. So this is where people get confused. The market's not neutral about the CPI reading. So if you look at this, I'm going to zoom out to the daily chart here. Let's just get a little bit of a nicer chart here. Let's go with this one. I don't know if that is much nicer, but we'll go with that one. We'll zoom in. So the markets weren't neutral. This is not neutral. This is markets running up into CPI the last 4 or 5 days, really expecting a good figure in 6.5. So they priced in 6.5. By the time the data comes out, where the market is sat is 6.5, right? So you've got to assume you're at 6.5. And therefore, if you didn't get a 6.5, if inflation came in at 6.7, 6.8, market would have just tanked. But where market came exactly on expectations, it's going to be like, cool, you expected it. We can stay at this level. We don't need to necessarily dump, but we don't necessarily have a reason to pump. Remember, on our notepad, what was the situation? A crazy beat would have been anything less than 6.4, so 6.3, 6.2. We're in this range. We're in 6.4 to 6.6 range. We came right in the middle of that, right? So market's going to be like, okay, cool. It's just going to be okay, right? So you can see here 1.5% to 2% was our expectation. We came in bang on in the middle here. And let's see now, what does this mean for the pre-market? So let's give this a quick refresh and see what the pre-market is saying. And it's slightly down, right? Down 1%, but again, the whole day is going to play. Remember, the traders take profits now, and then you'll see the long-term holders play through the day. So then let this play out through the day and see where we end the day at in terms of wider markets. But it is good news, right? It's not bad news. It's not crazy surprise, but it's good news. Inflation coming down meaningfully, triple beat. It's good, okay? Ian Medford says 15.5k was the bottom. It's really starting to feel like that now. It definitely is. You got to remember, when we were sitting at 15.5k, like that felt like a completely different world to where we're at right now. You had FTX going on. We still hadn't really recovered from the contagion around, 3 Hours Capital, Terra Luna. We didn't know the extent of the damage with FTX. We didn't know if any of the funds were going to be recovered. Now we're hearing that, FTX has recovered some of the funds, which is positive. We don't have fears around inflation. Inflation's really coming down. I mean, if we look at the path that inflation has taken, we were in these figures, June, July, August, September, we are 8.2 still, right? And then October, 7.7. Now you're talking 6.5. You're all the way down here. Let's refresh, see if they've popped that up there. Good stuff. They put it up there. 6.5, right? It's a meaningful progression. So the landscape and the environment is very different to when we were at 15.5k. So, it gives you confidence that that bottom is in. Macro landscape is starting to improve, but we don't want to get ahead of ourselves. We need to keep it in perspective, understand the different nuances, and play that accordingly. Reckless Danny, will we see 19k Bitcoin anytime soon? Absolutely. I don't see a reason why we can't head to 19k soon. I mean, if you look at my scenario here on the daily chart, I wouldn't be surprised to see a retest and then a nice big move up to the price target of 20,000. I wouldn't rule that out now, given what we've got. This is a nice, beautiful reversal pattern. Look at this low. The right low is higher than this low, which is a bullish inclination. Decent volume on the breakout here, although nothing spectacular. It'd be nice to have a strong volume day today. It'd be nice to have one of these, like this kind of a skyscraper volume, like this, like these two here. It'd be good to have that kind of a volume come in today. And then I'd feel confident that, okay, even if we wanted a couple of bad days, the rest of this, let's say, even Friday, tomorrow, and Monday's a little bit red, okay, fine, come retest at 17,800. That's another position to take a nice long, right? Remember, the way I like to trade is either I get in on the first breakout and I normally load in a bit of my position, normally a third or a half, and then I want to wait for a retest. So if this is your neckline and I enter half my position on the breakout, I'll wait for a retest, enter the other half, and then off we go. And if you wanted to, when you break this peak here, you can top in a little bit more at this point as well if you wanted to load up some more. So that's how you ladder in your positions on a long trade. A few people jumping in late. Gasper market already made the move in previous days. Absolutely, you're 100% correct. Real deal. Powell won't cut rates until there are signs of economy suffering. Yeah, I think he wants to see a little bit more pain. I think he wants a little bit of pain in the labor market. I think he wants a little bit of pain in the finance market as well. But at the same time, like, he's got to engineer a soft landing, and it's not easy. And if the market's yelling at him, putting pressure on him, say, "Hey, you killed us in 2022. Chill out. Inflation's coming down." And remember, there's a lot of lag. There's a lot of lag in interest rates. And a lot of that fall in CPI is not to do with these 50 basis points. It's to do with the 475 basis point rate hikes he did. It just doesn't come in immediately. Monetary policy lags. So he's done all that rate hiking, which is the fastest rate hiking we've seen since, I don't know when. I think it's like since, I can't remember. There's a long time. For a long time, we've not rate hiked like that. Maybe since even the Paul Volcker period. So, he's got to be careful. He's got to be careful that he doesn't get too gung-ho and trigger happy with it. And he's got to maybe have a pause. Remember what he was saying. He said, I'm happy to pause. If I need to, I'll turn it back on again. I think that's the right mindset. Go to 25 basis points. Go for a pause. If you need to and inflation notches back up again, fine, go for another 25 basis points. Go for a 50 basis points at that point, right? Instead of just going hard in the paint right now, not knowing, how much you're damaging the economy. And what was really important, which a lot of people will not notice or not be cognizant of, is the month-on-month figure. So I'm going to show you that one more time. This month-over-month figure is very important, okay? So this is showing us a negative figure, which we've not seen, okay? Throughout this period, you can see there was no negative figure. This is deflation. Deflation at a 1.2% per annum, okay? If this continued, this is not good. You need inflation in the economy. Inflation is healthy in an economy, okay? Right now, it's acceptable because we want to bring inflation down. Okay, but if you're running at a run rate of 0.1 and it keeps staying like that, 0.1, minus 0.1, minus 0.2, minus 0.3, you're damaging the economy, right? You're really punishing yourself. You're damaging the economy. Wages are coming down. You're causing a hardship in the economy. So this is not something that they're going to want to be persistent because they want to keep inflation at 2%. Okay, 2% range. That 2%, 1% to 2% range is about 0.15 a month. So this is okay for them to keep each month. Right, once they get to the rate they want to look at. Digital D, let's look at the Dixie. Always important to look at the Dixie. Thanks for the reminder. And let's jump straight here into our dollar index. And nice, we're getting a nice red day here on the dollar index. What percentage down is that? We are down 0.57%. Let's jump into the 4-hourly. Nice big move, extended move to the downside. Let's bring out our EMA ribbon. Good, happy with that. Getting rejected from its 4-hourly EMA ribbon and getting taught a nice lesson. On the daily chart, very good, nice and extended. And this is what we asked for. Again, guys, just looking at the positives because we stress the negative so much. Let's talk a little bit positively about when things are better. Throughout this period, look at the dollar index on a rampage. All since summer last year, absolute rampage here, tearing up exponentially. And now we've had a significant correction here, right? It's a significant correction. If we pop that into the weekly, if we can head down to where my arrows are suggesting, around this point at 98, that's a nice correction on the dollar index. And risk on markets could celebrate that. That'll be important. Let's have another quick look here at the S&P, up now 1.26%. Exactly as I expected, guys, right? Look at these traders playing their games. Let them play their games. At the end of the day, look at these crazy wicks here on the hourly chart. This is traders. Let the traders do their thing. Let's jump into the 5 minutes. And they're doing their thing, right? Ignore that noise for now. Let's look at where the day ends. And more importantly, the next couple of days ends, because that's a good CPI reading. Let's see if you guys have anything in the chats. Don't forget to smash up likes, guys. Really need you guys to smash up likes. Not enough of you smash up the likes Also, do check out the links in the description to BYBIT. I use BYBIT to trade. If you guys want to trade, check out BYBIT. I will be doing some interesting giveaways for those who are using our BYBIT links. So make sure you're involved, and the sooner you sign up, the more advantages you get in terms of winning some of those prizes. So definitely check out the links in the description. Curry Pot says, don't jinx it. Yedlam, CPI is coming down, but job market is still tight. JP needs to crash the labour market. Absolutely. You're spot on there. And that is why I said this year the market is focused on labour. They're assuming CPI is done. They won't care about CPI on the upside, but they will on the downside. If CPI messes up again in, let's say, the future reading, you will see redness, but you're not going to see crazy greenness from the CPI because they're almost expecting it to improve. Whereas the labour market, that's where we're going to get pumps. That's why even on that non-farm payrolls, we had a good day. Do you remember that from last week? We had a good day on the non-farm payrolls, even though the headline non-farm payrolls came in hotter than expected because they focused on the wage growth. Okay, so the labour market, or if you take one thing away, the labour market is a more important narrative this year, or at least the start of this year, than the CPI. Tom, you did really well. Thanks for the effort. Oh, I appreciate you, buddy. Darren, Dixie having a little dump. Yep, good stuff. Kieran, I would love to see you have a chat with Gary's Economics, who is seemingly anti-crypto, but has his head on his shoulders for the most part. Get him on the channel. Kieran, I think lots of economics come from wealthy backgrounds and can't understand poverty using models not taking into account many people accept they will be forever in debt. This is an effect on spending. Yeah, I think sometimes you get that effect, right? Where they're just so out of touch, they're looking at numbers, they're stuck in spreadsheets, and they don't understand what's going on in the real world. I mean, that's true, right? You know, the reality is, will Jerome Powell be feeling the pressure at the fuel pump when he's pumping his car up with gas? No, he won't be. But yeah, these are the guys that are elected to play these positions. Now, I think they should have more of a mix. I definitely agree. Moonshadow says, patience and DCA pays off. Cool. I think that's a wrap, guys. I will be doing another video as a summary of what just happened and how the market reacts over the next couple of hours. We'll let it play out, and then I'll jump on with another shorter 8 to 10 minute video for you guys as a summary. So definitely check back to the channel later on for that. Thank you for joining me. We've got a triple beat. Good news, right? Even though the market's not going crazy right now, it's good news. It's another feather in our cap, and onwards and upwards we can progress to getting out of the tight monetary policy we were in. Okay? Remember, we've not had a tightening cycle like last year for 14 years. You've been through something exceptional. I don't want you guys to think that, oh, I'm terrible at investing, I'm terrible at trading. You just came in at a bad time. It's a horrible time. It's a tough year for everybody. I mean, I shared that in numerous videos. Like, serious professional investors really struggled last year. They had nowhere to allocate funds. Anywhere they looked, emerging markets, no. Bonds, no. Stocks, growth stocks, crypto, nowhere to put your money. The best place to put your money last year was cash, right? But now we're starting to see some of those green shoots. We're starting to see an improving trend. We're not getting inflation climbing. We're not missing expectations. We're coming down as we expected. So let's note that. Yes, we're not going to get crazy pumps because the market already gave that to us. We're sitting in a much better place in the 18,000s versus the 15,500 we were in just a few months ago. Hope you guys enjoyed this video. Smash up likes on your way out. Don't forget to subscribe. Make sure you've got notification bells on because another video will be coming later on today. Ijaz.uk/TA if you're interested in TA course, and Ijaz.uk/member if you want to join our 3 times weekly live streams. That's where we go through the deep macroeconomic stuff, financial reports, tokenomics, fundamental analysis. We do technical analysis on there as well. If you have any questions, join us in those member live streams. You can cancel at any time. Thanks for watching, guys, and I'll see you.